But I'm Layla Ballard-Shally. I'll be going over governmental fund balance classification with you. For anyone that was with us last year and attended the training last year, some of this will be a repeat of that, mainly just like going through the GASB definitions. But after we got through most of the AFR season last year, which is well after FY24, we had to make some changes to policy and we ended up drawing more of a line in the sand for a lot of classifications because GASB 54 that deals with this is very subjective. And I don't think there's a way to make it remove 100% of that subjectivity, but we devised some new ways to make it where it's a little less so, just as far as how this applies to our state specifically. And last year I hadn't really gotten a good handle on things when I did the training. So that's not the case now. So I'm sorry if you attended the training last year. And like I said, some of this is a little bit of a rehash from last year, but there's definitely points in it that will be new. And I needed to redo this. So I record it and have a new training video that doesn't have anything that would now be inaccurate, because the training video last year does have some of that. So it has been taken down and completely deleted from our website. But basically, we've kind of changed to going to a more government-wide macro perspective when looking at the funds. I think a lot of funds before, it was kind of a more micro agency level perspective. So that's really the biggest change. And our unassigned balance before had gotten way too high. So this helped correct some of that. There were some other things that caused it, but that was a big one. I'm just going to go in, get started. Slide deck will work. Okay. So we still have the same 5 possible classifications: non-spendable, restricted, committed, assigned, and unassigned. I'm going to work backwards instead of, I'm going to go from least restrictive to most restrictive, just because I feel like the unassigned and assigned are two of the biggest changes that we have now. The unassigned is the residual classification for the general fund. And when I say general fund, this is more of an financial reporting general fund, not necessarily the budgetary general fund that you're used to. But that certainly is included in that general fund. Basically, this is the fund balance that hasn't been assigned to any other funds, and that has not been restricted, committed, or assigned to specific purposes within the general fund. Outside of that, your other governmental fund balances should only be classified as unassigned if they have a negative fund balance. And that's not something you would need to worry about on your end. We'll handle that at the ACFR level. So on your reporting package, if you have anything that's negative, which will show as a positive balance, by the way, on the package, or on whatever you're looking at, the package itself, I don't think has balances. You would not use that information to make the classification. You would determine the classification just based on what it normally is, aside from that detail. So now going forward, basically only have 6 funds that are classified as unassigned, plus the general fund surplus. So most of these are at the treasurer's office. I think one is at DOR, and one is think at the Attorney General's office. But those are the only like 8-digit funds that have it, aside from the general fund surplus, which I'll get into this part because it's a little more complicated, but basically all the funds beginning with a 1 or 2, even though at your level, you have those funds at your agency. For these purposes, those are all kind of being viewed collectively as one budgetary general fund. So all of those are going to roll up to the general fund surplus or carry forward balances. I'll get into that part a little bit in a second. But on your package, aside from these 6 specific funds, which, like I said, these are at just a handful of agencies, all of your packages, any funds beginning with a 1 or 2, should be classified as unassigned. Some of that will be reclassified at the ACFR level, but we will do that based on data from skis. And that will be for your carry forwards, but you do not need to change the classification and you do not need to report to me what your carry forward amounts are. I already have that information. If for any reason you feel like you do have some fund that should be unassigned for whatever reason, you can contact me and we can discuss it. But based on everything I've looked at, this is kind of where we landed on this. So for assigned, these are, again, these are GASB's definitions, but these are amounts that are constrained by the government's intent to be used for specific purposes that don't meet the criteria to be classified as restricted or committed. Intent should be expressed by the governing body itself or a body or official to which the governing body has delegated the authority to assign amounts to be used for specific purposes. Now, for us specifically, we're only going to use pretty much the legislator and or maybe the governor still for assigned, even though you can go to, you know, a body or official designated outside of that. For assigned fund balance, the nature of the actions necessary to remove or modify an assignment is less formal and not as prescriptive as it is for committed fund balance. And for governmental funds other than the general fund, all remaining positive fund balance that is not classified as non-spendable, restricted, or committed would be classified as assigned. So for the state specifically, our state, assigned fund balances represent amounts. All right, let me silence my phone. Sorry about that. For the state specifically, assigned fund balances represent amounts that are unavailable for appropriation and are not classified as non-spendable, restricted, or committed. Assignments are generally made by appropriation actions of the legislator. So some common examples here would be fund resources constrained by the Appropriations Act. That can just be your budget, or that could be provisos. Continuing resolution, the Capital Reserve Fund Bill, the SC Code of Regulations, and MOUs with other state agencies. Any funds classified as capital project funds are going to be classified as assigned, unless it is a federally funded capital project fund. And then again, the agency carry forward amounts of general fund appropriations, both special and general, those get classified as assigned. But again, that's done at the ACFR level by us. You do not need to report anything for that on your package. So, you know, there's that one-time recurring appropriation fund that we now have, the 1,500 whatever fiscal year it is. So for this year, it'd be 25. I think that's one that a lot of people are probably going to get hooked up on, but that one is also still going to be unassigned. So again, please don't change any fund starting with a 1 or 2 to any other classification other than unassigned. I think in the past we had fund balances constrained by provisos labeled as committed, but this has changed to assigned just because the actions, kind of going back to this last slide, the nature of the actions necessary to remove or modify the assignment is less formal and not as prescriptive as it is for committed fund balance. So what the legislator would need to do to change provisos is less formal and not as difficult than it is to modify state statute, which is where most of your committed is going to go, or into restricted. Now, before I move on to committed, I just want to see if anyone has any questions about that. You can type them in the chat. Or if you feel like they're too complicated to put in the chat, you can raise your hand and I can unmute you. Okay. I don't see anything. I'm going to keep going. Committed fund balance. These are amounts that can only be used for specific purposes determined by formal action of the government's highest level of decision-making authority, which is usually the legislative and/or executive branches. Committed amounts in fund balance can't be used for any other purpose unless the government removes or changes the specified use by taking the same type of action. In our case, this is usually going to be legislation that it employed to previously commit those amounts. So for committed fund balance, you can, or the legislator can, redeploy these amounts for other purposes as long as they do it with the appropriate due process. Committed fund balance should also include contractual obligations to the extent that existing resources in the fund have been specifically committed for use in satisfying those contractual requirements. The legislation that imposes restrictions on the use of committed fund balance is separate from the legislation that created the revenue source. So this is a key difference between committed and restricted. I know I haven't gotten to restricted yet, but for restricted, the same piece of legislation authorizes the revenue and creates the restrictions. Committed, it is often different pieces of legislation. And finally, compliance with constraints imposed by the government that commit amounts to specific purposes is not considered to be legally enforceable. All of that, again, is just your GASB definition. So for our state specifically, committed fund balances can only be used for specific purposes pursuant to constraints imposed by formal action of the legislator. Constraints are created by an act codified in state statute, so the SC Code of Laws, that place constraints on resources but did not authorize revenue source from an external party and/or is not considered legally enforceable. Legally enforceable, again, I'll get into that more once we get to the restricted part. So here is an example of a committed fund balance. South Carolina Resilience Revolving Fund was created by 2020 Act number 163. And it was codified in the SC Code of Laws. I'm not going to read that whole thing out, but that's where it is. And that required fund resources to be used for hazard mitigation and infrastructure improvement loans and grants to other state agencies, local governments, or land trusts. So this act said that, but it didn't create any kind of funding source to fund the loans. And based on what I looked at, this fund has been a significant revenue source for this fund has been just non-recurring general fund appropriations. So this is a good example of a committed fund balance. Restricted is probably the one that still has the most subjectivity to it. Just one part of it is a little subjective, but restricted is applicable when constraints placed on the use of resources are either externally imposed by creditors, grantors, contributors, or laws, regulations of other governments. That would include the federal government too. It's imposed by law through constitutional provisions or enabling legislation. So, enabling legislation authorizes the government to assess, levy, charge, or otherwise mandate payment of resources from external resource providers and includes a legally enforceable requirement that those resources be used only for the specific purposes stipulated in legislation. So for a restricted fund balance, if all of that is checked and it meets all those requirements, restricted fund balance cannot be redeployed for other purposes. It is totally restricted to the purposes here specified in whatever is driving the constraints, whether that's a law or whatever. Legal enforceability means that a government can be compelled by an external party, just as the citizens or the judiciary, to use resources created by enabling legislation only for the purposes specified by the legislation. Enabling legislation is considered a compact with the resource providers that the revenues raised pursuant to that legislation would only be used for that promised purpose. That's kind of a key piece. I don't think this is something I mentioned last year, but this is in GASB. And then per GASB 46, which precedes GASB 54, but it still applies to a lot of this. The enforceability of an enabling legislation restriction is determined by professional judgment. Again, this is where the subjectivity still comes into play. And enforceability cannot ultimately be proven unless tested through the judicial process, which may never occur. The determination of legal enforceability should be based on underlying facts and circumstances surrounding each individual restriction. So for this one, what are we considering enabling legislation for the state? This would still be an act codified in state statute, similar to committed fund balance, but it has to authorize a state agency to assess, levy, charge, or otherwise mandate payment from an external party. And B, includes a requirement that the revenue be collected be used for purposes specific enough that the state could be compelled by an external party to use the resource only as specified, i.e., the requirement is legally enforceable. So with all of this, you guys may be selecting a classification when you do the package and certainly have input on it, but our office, in most cases, still has to ultimately make the final classification. And for this one specifically, there are some that we use professional judgment on that we felt like would not be a legally enforceable requirement, even though all the other boxes were checked for something that it looked like it was restricted, but because of that, it got classified as committed. So if you have any that you see on your package that you feel like it should be restricted, feel free to call or email me and we can discuss it, but that may be part of the reason why it has that classification. Some examples of restricted are grant programs. Those would be originally awarded by non-state entities. Donations, contributions made with restrictions, the extendable portion of a permanent fund, legal settlements that stipulate restrictions, the Education Improvement Act funds, and the Infrastructure Maintenance Trust Fund. And that one is a good example. It created a gas tax and specified that that gas tax money had to be used for specific things. I think most of them were bridges and road projects. But I also want to mention that grants awarded to a state agency from another state agency may end up being classified as committed or assigned rather than restricted if the grant is funded using state appropriations or other state funds that are classified as committed or assigned for the state agency awarding the grant. So, you know, if a state agency is passing through federal funds to you, that is different. But let's just say they got a non-recurring appropriation in a fiscal year and they awarded a grant to another state agency. That particular case is not going to end up being classified as restricted. I don't think we have a lot of that, but I did have a few last year that I kind of had to dig in and see what was really going on. So because of that, the package is now asking more questions about grants, and I'll get to that in a second. We're almost done with the slides. Non-spendable. This is the one that you'll probably not even really need to use at any point. Just because for prepaid expenses and inventory, we will reclassify those balances. And then anything related to a permanent fund is pretty rare, but most of those are really old and have been around a while. But you could have a new permanent fund come up. So I'll still go through all this. But basically non-spendable are amounts that can't be spent because they're either just not in spendable form or you're legally or contractually required to keep the amounts intact. So for not in spendable form includes items not expected to be converted to cash. This is most often inventory or prepaid expenses. But it also includes non-current amount of receivables and property acquired for resale. The non-current amount of receivables is still tricky because if the proceeds from the collection of those non-current receivables are restricted, committed, or assigned, then you still have to classify those receivables as restricted, committed, or assigned. And so for this reason, we've only started looking at non-current receivables and funds beginning with a 1 or 2. The other half of this is, again, the principal portion of a permanent fund. And usually a trust agreement, will, or state statute will specify that the principal must be kept intact in perpetuity and earnings on principal must be used for a specific purpose. And a few of you have funds like this, and generally you have one fund set up for the earnings and one fund set up for the principal, just so it's easier to make sure you're not spending the principal amount. A lot of you, or everyone gets a skis report related to this. We may discontinue that at some point because we don't need you to, certify those balances in any way. It's meant to be more of a tool for you. And the only reason I can think that maybe you would need it is to assist with maybe reporting grant balances. But at some point I might kind of send out some sort of survey to see if anyone really uses it for that purpose. Because if you don't, again, we might just stop sending those out. I think they end up creating more confusion than anything. And I don't really know how helpful they are. I think way back in the day, you did have to certify the balances on this package, but that's no longer the case. So the report is becoming less and less necessary, I think. Another thing that's changed is I think in the past, this package, I think maybe on the master package, it told you couldn't submit the governmental fund balance classification package before a certain date. That shouldn't be there anymore. As soon as this becomes available, you can turn it in whenever. Everything should be final at that point. So there's no reason for you to have to wait. And this is one that is in Workiva this year. So I am going to switch to Workiva to go through the reporting package part. Yeah, didn't. Before I get to that, I want to see if anyone else has any questions about anything I've talked about in the slides. I don't know about you guys, but I'm not a huge fan of governmental fund balance classification. I have a feeling a lot of other people probably don't care for this package either. But it's just something else that GASB makes us do. Okay, no questions? I am going to share my screen again. Linda, can you see my screen?
Yes, ma'am, I can see it.
Okay. And I don't know if everyone's noticed how difficult it is to work with this little tiny window in Workiva, but you can kind of push that outline over so you have a little more space. Still not great, but I'm going to try to, I don't know if that's now too small for everyone. And is this too small on your end?
It looks okay. It looks good.
Or should I stay at 100%?
Go back to 100. $95 was okay.
Okay. If anyone needs it to stay at 100%, you can put it in the chat. I'll change it back, but this does make it where you can see the whole form. So hopefully you can still see the text. This form is still set up basically the same way. Most of the questions are the same. There's just a few that are a little different. But I'm just gonna kind of go through this as if I'm filling this out. I'm gonna kind of pretend some of these funds are a little different than they actually are, just for example purposes. But for these first two, I'll kind of go through each question, through each fund. That might be easiest. The first one is the fund still being used at fiscal year end. That's the same from last year. Let's say I had one that I put no to. You still get an action item pop up like you did on the old package. The only difference here is you have to click on this cell and you'll have to attach your document directly to the cell. I'm just going to attach a dummy document. And once I attach it, I can click on it and see it's yellow. If I don't, it is a little harder to see because it's filled in red, but there is still a faint yellow outline around it. And you will also see it in your attachments window. Hopefully everyone's familiar with that at this point, but that's going to be something you have to deal with on every package. And on some of them, again, it will be on the actual forms, not just the signature page. Question 2. Sorry, someone sent an email. I don't know if they're Denise, are you actually in the training? Okay, let me clarify something because maybe I didn't state it correctly. In the past, you were not allowed to turn this package in prior to a certain date. Now you can turn the package in whenever you want, but the package will not be available in Workiva for you to complete it until August 1st. So it does have to be there for you to complete it. I guess that's the part I didn't make clear enough. So once it's there August 1st, if you get it done August 1st, you can turn it in August 1st. But prior to that, unless you want to create your own package in Workiva, which you don't have the capability to do, you wouldn't be able to do it prior to August 1st. And the package is due August 22nd. The due dates are on our gap calendar on the website. I don't think we have the package generation dates on our website, but they were gone over in the Workiva training. I think we were hesitant to post these dates officially, just in case we have any sort of delays. These are kind of planned dates, but we do anticipate this one being in August 1st, which should give everyone plenty of time to get the package done. Okay, so sorry about that. Question 2, this is one of the ones that is a little different, or I think it's completely different. It asks, have there been any significant changes in the fund activity during the fiscal year? If yes, please provide updates on the next form. I'll get to that other form in a second. And examples might include, but are not limited to, new revenue sources, new or modified constraints placed on the use of fund resources, and or changes in major sources of fund revenue. So with this, even if you're not changing the classification, if you had something change in the fund, you need to report it. Now, I know some agencies might have a fund that has a lot of different activity going on in it, and if it's something really minor, you don't necessarily have to report every single thing. But the more you can tell me, the more it helps me out, because those mixed use funds, sometimes their classification is decided based on what is the majority of the fund balance activity. Like, we don't go in and assign 40% to committed and 60% to restricted. We do the whole fund based on what the majority of it is. So I will put no to most of these, but we'll put yes to this one so we have an example. And then 3, if the classification in this documented classification column is blank, or if it's incorrect, please select the correct classification. So this one didn't have one. We put it unassigned because it starts with a 1. And I guess I don't have another good example for 1, but We'll kind of use this 3 fund as kind of I'll show you a couple different examples using the same fund. But let's say we change that to restricted. Number 4, this same question, is any portion of the fund balance related to a grant? I'm going to put yes for this one. So we're prompted to do something with that. And now a lot of agencies, I think, forget this. If it's a fund that begins with a 5, please put NA because you don't need to do anything else. We already know that is a federal grant fund. And you don't need to go through the process of filling out anything more for that. I'm going to put yes for this one too. As you noticed, when I put yes for those, it had something pop up, basically just reiterating what questions 5 and 6 say. And question 5 asks you to actually provide the portion of the fund balance that's related to the grant. You're going to have to remember that this is, if it's a credit balance, meaning it's actually a positive fund balance, you would input that as a negative value, and the debit balance, because it's actually negative, you would input that as a positive amount. So that's just accounting rules, but you do it kind of the opposite of what you would think. So I'm going to leave this as no. This one, let's just say, was $100,000. Which was a positive $100,000. I have $100,000 I have not spent that will be used for a grant. Number 6 is a new question. If the answer to 4 was yes, you'll need to provide a brief description on how the balance relates to a grant, including the name of the grant, who awarded it to you, and if the balance you're reporting is either just the residual balance of the grant revenues or matching funds for the grant. I don't know why I changed this. I need to keep this that way. We'll that. So for this one, I tried to think through my examples yesterday and I'm still doing it wrong. This is my grant one. This isn't. I have a cheat sheet, but I'm not actually looking at it. Kind of defeats the purpose of having the cheat sheet. Okay. For this one, you just put grant received from a private foundation for new software development. And balance is residual balance of grant revenues. Let's say this one up here, I'm not going to keep it, but let's say I did put yes. Maybe I had something in the proviso for non-recurring revenues that said that I could use X amount for grants, grant matching. I would just include here that they're matching funds for a grant and say, the grants FEMA disaster relief grant matching funds. Those are the 2 examples of how it relates to a grant that I have up here, but there is very possibly other ways it could relate to a grant that I'm not thinking of. So please be sure to mention them. Neither of those apply for you. Change that back. It's everything for this form. Question that we had last year, asking you to confirm your assigned balance. That's not on here anymore, and that has a lot to do with the changes we made. So you don't have to worry about that. Are there any questions about this form? Okay. I'm going to move on to the next one. So I should have two funds showing up on this other form, which is the classification change update support form. For that first fund, I added a classification, but I didn't put yes to it. Okay, sorry. I'm just reminding myself what I did here. So for this one, it's just a new fund. Non-recurring appropriations. '23. By '23, non-recurring appropriations. And put proviso, I can't remember what it is, like 118 or 119.20, something like that. No, sorry, that's wrong. You don't really have a revenue authorization for this because it's the tax money is basically the revenue for most of the appropriations. You could have some provisos that authorize you to collect revenue, but we'll just pretend this one isn't like that. I don't know that any of the non-recurring ones would do that anyway. And let's just say this also was for us to buy software. So funds must be used to purchase new payroll processing software. And this is where I would put the proviso. The more specific you can be on all this, I know I'm not giving great examples. The more specific you can be, the more helpful it is on my end. I have done pretty extensive research on most of the funds at this point, but it can still be really hard for me to find everything I need to find. Especially if you have one that is governed by many different statutes that are in titles or articles of the statute. So please try to provide as much detail as you can. This one, this is the one I put. This one I put yes to 2, and I changed the classification. But let's say I hadn't changed the classification and I was just providing updates. This would be blank, and that's okay because I'm not changing the classification. You put NA here. NA for everything that you don't need to provide an update on. And let's say the revenue, all that's the same, but maybe a grant award agreement was altered. Let's say a law was altered. State statute. Making stuff up. I did it backwards. You'd put what the constraint is here. In the actual law here. Sorry about that. So let's just say we have a new statute that applies. We have other stuff that's still in there, but this new thing passed. And now we have this. So you're just letting me know I have another law I need to consider when looking at this fund and another constraint that needs to be considered. Hopefully all of this is being communicated to everyone. I'm not sure how that process works. Okay. Kind of going back to where we were. Let's say we didn't hit, well, we just decided that this was wrong. Even this no, but we need to change the classification because it's wrong. So let's just say, I mean, even it's in the names of the fund, but let's say this fund is only for grants from external entities. Grant awards. Sometimes the reason and the purpose are kind of the same. Grant award. Personally, with grant awards, kind of going to be the same thing for most of this. So let's say the grant award requires you to only use it for disaster mitigation. That's it. I think some of these might be set in a way where maybe you have multiple grants in the same fund, but they're all kind of from, you know, a certain type of entity. You could include the multiple constraints, even if it's kind of blended into the same fund. Or you can mention who you received it from. Again, the more detail you provide, the better. I can try to work with whatever you give me too, because I certainly did last year. Now, one thing I'd like to mention is there are some funds that I have struggled to find information on. So some of you may get your package and you may have a fund that has documented classification blank, and you know, maybe it had a classification there in the past. That is my way of forcing you to now provide me the information that I am lacking. So hopefully that won't be a ton of funds. But if you see that, that's why it happened. And again, you can call me with any questions you have about that or classifications. Anything you're unsure about, I'm happy to help with anything. I know this is not a fun package. As far as how this works in Workiva, you've seen the main two forms. There's still this classification definitions part. It doesn't have the little graphic at the top that it used to because they couldn't get that into Workiva, but it does have this, and all of this has been somewhat updated to reflect things we've changed. Like here, I added our state-specific definition. I think that's about it.